You might hear about the Great Smog of London. In December 1952, a severe air pollution event happened in London. That was mainly due to large amount of industrial waste gas emitted by a number of factories. As the first country achieving industrialization, United Kingdom firstly realized industrial production's impacts on environment. Nowadays, more and more countries are aware of this question and use many solutions for it. Economics is one of the most effective tools to solve environmental issues, and pollution taxes and emission trading are typical economic means. So, what is pollution taxes? Pollution taxes are also called green taxes or eco taxes. It's a kind of taxes levied on operating activities which causing environmental pollutants. It includes many taxes such as carbon tax, waste disposal tax, and steering tax. The amount of tax always depends on the amount of pollutants they produce. A typical way to level pollution taxes is setting limitation to a pollutant. If a company go over the top, it must pay additional money for its impacts on public environment. But because of technology restriction, not all companies can successfully operate with limited emissions. These polluters may choose emissions trading as a solution. Government allocates limited permits to discharge. If a company wants to increase its emission, it can purchase permits from others who has surplus emission loans. That largely encourages polluters reducing pollutants because emission permits can be exchanged to money. Why government use taxes to protect environment? Here I want to explain the role of tax with a macroeconomics theory. A company makes its decision by considering revenue and cost. We now suppose that it produces some pollutants outside and that damages public environment. The damage is a result of the operation activities, but the company doesn't regard it as its own cost, so it doesn't care about that. However, if government levy a pollution tax on its emission, it has to pay money for the pollutant. In this case, it will concern the cost of emission when it makes operating decisions. To sum up, environment is a public good, and the company makes decisions based on its own profits. The role of tax is converting external cost into internal cost. Similarly, it also works on emissions trading. Company can earn money by reducing pollutants, so its contribution to public environment becomes its own revenue. Now I want to show you how pollution taxes work in real life with some examples. After first growth of economy, we found we ignore that environmental pollution have threatened the survival and development of human beings. As a developed country, America realized the problem early. Now the eco-tax system in the US is completed. It covers a wide range of aspects, such as petrol tax, environmental income tax, mining tax, consumption tax, and the solid waste treatment tax. These taxes cover basic consumer behaviors, products, and energy. Now I'll mainly talk about carbon tax. Carbon tax is a cost that asks fossil fuel users to pay for climate damage caused by the use of carbon dioxide. The tax is usually used on the conversion of clean energy. Carbon tax is a popular topic because over 80% energy consumed in the US is carbon-based. Based on the existing taxation mechanism, the carbon tax is paid upstream. That is, for example, where the fuel is extracted from the earth and enter commercial traffic or is imported into the United States. The carbon tax can bring monetary incentives to customers and producers to reduce carbon dioxide emissions. Carbon tax has also been introduced in other countries. Australia applied a carbon tax in July 2012. It aimed at reducing carbon emissions to relieve global warming and climate change. Carbon tax encourages Australian people developing and using clear energy, such as wind, water, and solar. India and Japan also introduced carbon taxes. However, in most cases, population taxation is not an easy thing. Drop of pollutants is bound to decrease of production. To individual, lower production result in reduction of income and profit. That is why a tax regulation always faces different doubts. To communicate, limitation of production means restriction on development. The contradiction is shown on United Nations Climate Change Conference. Somebody argued that development countries should have less emission permits or pay more, since they have done more emission in history because of their growth. Now it's time to pay their ecological debt. While some people see higher development level means higher production demand, so developed countries deserve more permits. Although not everyone agrees with the pollution tax can still be seen as intensive to reduce environmental burdens and protections of the environment. Pollution tax generates income which can also be used for other environmental protection projects. As an important tool on solving environmental issues, economics has high relationship with other tools, such as technology and regulations. Taxation and emissions trade urge producers purchase high efficiency with improving production technology, and taxation is guaranteed by policies. People may have different thoughts about the effects of economics on environment issues, but everyone would certainly want to see an environmentally sustainable future and a healthy natural environment in their country.